rise in inventory, pre-construction financing, and how that can go sideways in a matter of seconds. Yeah, all this and more with a good friend and mortgage broker, Mr. Dion Beg. Here we are, my friends, with our favorite mortgage broker in all of the land, Mr. Dion Beg. How you doing, my man?
Hey, Gary. Great. Lots to talk about this week again.
Lots to talk about, and we're going to do a few things here. We're going to do a little myth busting. We're going to talk about, numbers and how they relate to us as Canadians, and maybe some opportunities, even though it doesn't look like there are any. And of course, Dion, there's many new builds coming, and a lot of our clients are closing on pre-construction. So we're going to talk about that a little bit from your perspective, and of course the buyer's perspective. But let's kind of start with where we are right now in Canada, in a sense, with sales. And here's as we kind of peel the onion away, Dion, April's numbers. How about this? April showers bring May flowers. So maybe that's the optimism that you and I both share. Our numbers were down a little bit in April.
For the weather, and it's kind of always been true for real estate as well, right? In that, things build momentum in April, and then come into May and June, we see even more explosion before the holidays of summer, right? People get quite active in real estate. But yeah, this year's telling a different story a little bit.
Yeah, different story. Typically, the market, when I say builds, it has that increase of sales, and from March to April, we see an increase. This year, we've seen a decrease in sales and inventory levels. We're going to use the word rise, but I want to use that word cautiously, because as inventories rise, typically in previous years they would get consumed, and we're seeing months of inventory, or perhaps a better way to say it is weeks of inventory as opposed to months of inventory. We're seeing that increase a little bit because of maybe the lack of people willing to go out and shop right now. What are you seeing from your side, Dion? And I'll kind of share a couple of thoughts that I have.
I'll give you an anecdote from an event that just happened last week, in fact. So we had a client come in a couple of weeks back. We got them pre-approved, ready to buy. They're moving from property 1 to property 2. The second property that they wanted to buy was going to be in that 1.9 million range. They found a great property. They signed the purchase agreement. We were moving forward. We got them approved within a couple of days, as we normally do. But it was still within their 5 days of conditional period. Okay, and during that 5 days of conditional period, a house on their street, on the street where they needed to sell their home, sold for 100 grand less than what they expected. Okay, so they were hoping to sell for 1.3, and the competing house or a similar house sold for 1.2. On seeing that and understanding that their down payment would be reduced, they actually weren't able to move forward. Well, they chose not to move forward with their purchase, okay? Because even though financially they actually would have probably been okay, on the other side of things, it might have made things a little bit hard for them long-term financially. So under the financing condition, which allows you to assess all of your finances, because they saw that new information, they decided not to proceed with that purchase. Okay, so it was agreed they were mutually released from that purchase. But I'm sharing this story because it shows right now that we are likely in, and very deeply in, a buyer's market, right? And this has been sort of a bit of a wave where they were expecting 1.3, now we're at 1.2. That means that whomever is buying on that street is now paying 100 grand less than what they may have expected to pay in the past. And when I say in the past, I mean in recent history. You and I have been talking about multiple offers, right? And it seems to have potentially just turned on a dime where, okay, that property didn't get the multiple offers that they wanted, and they got a lower price. So that's just one anecdote from last week.
Yeah, it's interesting. We're still seeing activity. We'll call it activity throughout the market in all price ranges, albeit as the higher you get, the slower it typically becomes. And And in that entry level price range, we're seeing some properties come out extremely high. We're seeing some properties get listed, we'll call it extremely low, to gather or to garner attention to themselves. And in some cases, or in most cases, it's working. So I can think of an example the other day, a home around the corner from where I live in Stouffville. They came out at $999, we'll call it, which would garner a lot of interest, obviously. And it sold for $1,150,000. Why is that a story? Well, this home still probably requires, I'm going to suggest, about $300,000 to bring it up to new home spec. It's very dated. It needs renovations inside. I mean, could you go in and live in it today? Yeah, you could. But it's very, very dated. And there's still that type of buyer out there. And you mentioned to me something offline, which I hadn't thought about. Our entry level point in a lot of areas is now at about that $1 million or more.
Yeah, it's crazy. It's crazy to think that that is now the entry level. And we're not talking downtown core. We're talking suburban Toronto, GTA, and specifically in your case, you're talking about Stouffville, right? Yep. So, Gary, in your region, where can you go to buy for less than $1 million?
Well, if you want to buy less than $1 million in York region, you've got to go north. You can do it somewhat a little bit in the Newmarket area, but to give yourself that greater opportunity, you're into Keswick, which now has a highway. 404 goes all the way up there. Then you're into the Sutton area, and if you want to think about going east, of course you can do that into the region that you know a lot more, into Durham region. So you can get into homes like that in Oshawa, but the more east you go, the cheaper it's going to get, obviously. It is nuts. And from a financing perspective, you reminded me that at $1 million range, that's kind of the cutoff point for what, Dion?
Yeah, for the CMHC or just any type of mortgage insurance, meaning that at $1 million, you have no choice but to put down 20%. And so if we're talking, let's put this in perspective here. If these are first-time buyers, if this is entry-level homes, this means they're probably attracting first-time buyers. This means that the average first-time buyer now must be buying for $1 million plus. They must be putting down 20%, which is $200K plus. And as that translates to household income, to qualify for a mortgage in that range of 800 to $1 million thereabouts, you're going to need a household income of around 175 to 200K. So that is the profile of what is required now to purchase in most areas in the GTA.
Yeah, it's incredible. It's incredible. Okay, so what are we saying? We're saying, let's just kind of sum this up a little bit. Yeah, the home sales are down somewhat, to a lot of surprise, if you will, of the pundits in the real estate in the real estate market. However, here's where we're kind of seeing a little bit of opportunity. If there's less sellers and more inventory, if there's less buyers and more inventory, that typically provides a little bit of opportunity for you as a buyer. Why do I say that? It's kind of my gut feeling. This is pure gut. This says not substantial on numbers or stats or anything, but what we're kind of feeling just at this moment is there's people perhaps waiting, or we'll say the masses waiting for that interest rate drop in order to go shopping for a new home. And let me tell you, my friends, my gut feeling, pure gut feeling again, that when that happens, I'm not going to say, all the masses are going to come. However, I would rather go shopping for a home with less competition than more competition, Dion.
Yeah, agreed. And I mean, we don't need to we can go beyond your gut and just look at history and the drops that have happened historically in real estate interest rates. And you can see that the influx that happens at that time. So it's very easy for you and me to talk about this and say, oh yeah, makes sense. Just buy now and wait, and you beat the crowd. But if you're a first-time home buyer, I totally get why you're still sitting on the fence. I totally understand the emotions, the concerns, that come with, making a purchase of $1 million, right? So if anybody wants to talk that stuff through, I would say feel free to reach out to myself or Gary, and we'll talk you through what those numbers are. The other thing I'll mention too, Gary, is like you and I just told two stories. One where I showed you a market where there was a buyer's market. A buyer got a good deal. you at the same in the same week are telling me a story of a market where the seller got a good deal for their sale. So this is not a story of one market, even inside of the GTA. It is neighborhoods, it is pockets, it is streets, and you need to be working with realtors to understand those differences. Because it's like I heard somebody say once, it's like putting your one finger in a cold cup of water and one finger in a boiling hot cup of water, and saying, yeah, the average, it's warm, right? And they're within the same region, but it's very, very different, right? So it's important to be working with professionals to understand that difference.
I like it. That's a great reminder. Okay, my friends, let's move on to pre-construction. And there's a big thing here that perhaps a lot of buyers or even onlookers don't understand, and that's you go put in your purchase and sale agreement. You have a completion date, and we'll call it 18 months or 24 months out or even sooner. And then all of a sudden the builder calls you to say, what, Dion?
Yeah, so they say, yeah, let's close in 3 weeks, right? And this is not uncommon, and it causes a hell of a lot of stress for the buyer, for us, for the buyer, for their lawyer, right? So in many cases, clients are waiting 1, 2, 3 years, 4 years for construction, and as you know, Gary, they keep getting delayed and delayed and delayed. I feel like some of the buyers in these scenarios are like, oh my God, what's the point in even reading these notices, right? They get to the point that, okay, it's just another delay. But then things change suddenly, and they get a letter saying, okay, we must close in the next 21 days. And this can cause a world of trouble for people. I think we briefly talked about this, but I've got some stories to share that have happened in the last couple of weeks that I think are lessons that listeners can learn from if you have a pre-construction. And so they are the fact that maybe you bought a property 3 years, 4 years ago, and at that time you made your decision to buy that property, that condominium, for example, based on a certain interest rate. And none of us 4 years ago saw interest rates at the Bank of Canada being 5%, at retail at 6 to 7%. None of us predicted that. And so we're going into scenarios where people thought they were good, but because rates have jumped, we have to now figure out ways to get these deals completed, right? And I'll share with you some examples of how. So we recently had a client come to us who was told that they were going to be a B client, right? The only way they were going to get funded was with an alternative lender, higher rates, higher fees. And the truth is, with the application, with the way it stood, that would have been correct. But when we saw that this person already owned 4 properties and he only carried his debt on his principal residence, we saw an opportunity where we said, okay, if we could actually refinance the rentals and take the debt, put the debt on the rentals and kill the debt on the family home, we're actually changing out good debt for bad debt in the way that the banks look at rental offsets, okay? And so because now the debt was carried on, just let's say on this condo over here, and we could use the rental income to directly offset that, they use a different formula when the debt is on the property rather than the debt being on, say, a family home. And so we were able to reshuffle some stuff around, put the debt on the correct properties, clear up the debt on his family home, and then we made him into a Schedule A major bank client, right? So that was something that was able to be done. We had to do it under, again, that pressure of about 3 weeks away from closing, lots of moving parts. But I'm sharing this story to let people know that, hey, listen, if you have any inclination that your closing could happen anytime in the next 12 months, let us plan those potential moves now, not in that 20 days before closing, because oftentimes it's not enough time to get it done. So that's one example. Another example would be, Gary, I had an older person closing on a downtown condo. Their financial circumstances changed. And she was old enough to qualify for a reverse mortgage on her family home. So we took the mortgage, and this is almost the reverse of what I just told you. We took the mortgage on her family home where she could qualify based on lack of income and use that to buy the downtown condo. So 2 very different stories with very, very different profiles. But these are the things that, again, we need ideally more than 1 month run up. So if anybody's listening, you got a pre-con happening, call us early so that we can calmly, in a stress-free environment, plan these moves.
I like it. I like it. Calmly
Yeah,
move
yeah.
forward. Yeah, yeah. And you brought up something really interesting there too. And let's circle back to that perhaps in a future podcast. Is the reverse mortgage? There's a lot of perhaps negativity around what that is, and I think that's because of years past in media kind of blowing it out of proportion. But under the right circumstances, it is a great tool for those individuals. So let's make sure we get some clarity on that in a future call. Okay.
Yeah, happy to.
Let's do a little myth busting. And I know. We always kind of talk about these big numbers and the Canadian government, what they want to do in population, but talk to us a little bit about the population growth and how it relates to maybe our brother to the south of us.
Okay. So you and I are forever talking about population growth, but it's because it has such a huge impact on supply and therefore pricing, all the things we've already talked about in today's call. But I saw a recent stat which really just jumped off the page at me, and I want to share these numbers with everybody. So I want to go back a couple of years. Let's say we go back just 4 years. The population of Canada was in the range of around 38 million, and the population of the United States was at around 330 million. Okay, using round numbers, let's just say we're about 9 times smaller population-wise than the US. Okay, now let's look at the population growth that we had in Canada just last year at around 1.2 million. Some will say 1.3. Let's say 1.2 million. Okay, now as that translates to the United States, if the US was to bring in the same proportion of new people, new population into the United States as Canada did, then the United States would have brought in close to 11 million new people into the United States. So what did they actually bring in? They actually brought in 1.7 million. Okay, and people in the United States are still concerned about the growth that they've had there. So you can see the disparity there, guys. We're growing at a rate that's, well, what's the math there? I won't be able to do it, but basically we should be growing a lot less than the United States is, and we're growing marginally less than the United States is, right? Okay, you know what? Here's the math. We should have grown by about 200,000 people last year if we were to use the scale in reverse, right? Is that the number you got there, Gary?
Well, the funny thing is, so I'm trying to Google as fast as I can cities that of 11 million people. Hang on a second. Let me just scroll down. So that is like adding the city, almost the city of Los Angeles, almost the city of Moscow. Paris is smaller than that at 10.9 million. So you get the idea. I could go on and on and on. So you're literally adding a Paris.
All right. And I did the math here. So let's reverse it. If the United States went from a population of 330 million and added 1.7, okay, proportionately, Canada should have added around 160,000. That's the proportionate number, right? So you can see the disparity. It's just incredibly different.
Wow. So they added, typically we should add the city of Barrie as an example of about that. Barrie's a little bit bigger than that if I'm not mistaken.
Yeah, and I'm not saying that the US has the right number, but I'm saying proportionately, that would be the number. Well, yeah, math is math, right? So what's the math? Yep, it's an ambitious and worthy goal. At the same time, I'm never going to play in the NBA, Gary, even if I make that my goal. So we got to put the world of reality and overlay that into our plans. And yeah, I mean, you know, like I said, they could surprise us. Modular homes, 3D printed homes. I don't know. Maybe you and I will be proved wrong, and people will watch this in years to come and say, "Look at those two talking heads," and laugh at us. I hope so. I really hope so. But I can't see it. I can't see that many homes delivered uh, between now and then.
Yeah, yeah, crazy, crazy. Every home per minute. So we always look at the opportunities, and I think it was our last week's call we talked about employment. And again, if you're looking to change employment or you're getting into new employment, and the trades is definitely on the verge of a boom. Because of the lack of trades that are currently available for just the amount of housing that we need today, and knowing that we need to add a home per minute for the next 7 years or so, that might be a great opportunity for a lot of people to take up a new occupation with, right?
I agree. I agree for sure.
Yeah. Okay, my friends. So here's the thing: we look at what's going on in the market. We like to kind of peel that onion away, if you will. It's important to always connect with professionals, and definitely, as Dion said, if you got a pre-construction that you're coming up and you've got a purchase and sale agreement on, reach out to Dion and his team today, even though that closing date might be what feels like months or even possibly years away. There's a lot of planning involved, and definitely on that refi, talk to Dion's team today, my friends. How do people get a hold of you?
Yeah, kangamortgage.ca or on Instagram at @thedionbeg.
There you have it, my friends. So, of course, that's Dion Beg. I'm Gary McGowan. We'll see everybody in the next episode. Goodbye for now.